Which are the steps of creating a profitable trading strategy? That is what I will be speaking about in this video. So step by step, which are the key elements that you have to add to a trading strategy to make sure that it will pay you in the long term. Now, if you're new to the channel, I'm a top order on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel and I will see you in the video. Okay, so what we will be doing in this video is, first of all, giving you guys exactly the 4 steps that you have to follow in detail to actually develop a profitable strategy. And then what I will also give you is a full breakdown of the situation that we currently have on USD JPY, and I will show you in which zone we can be looking for a very good trading opportunity at the moment on the pair. So I really suggest that you stick to the video until the end. And I will also show you this live analysis because I want to show you a practical application of exactly which are the best things that you're supposed to be looking for when you have to decide which are the rules of your trading strategy. But first, let's start by the first point of the video, which is how you're supposed to actually develop a trading strategy. Now, there are 4 steps. Number 1, you have to define a clear set of rules. Now, what does it mean to define a set of rules? Now, the rules need to comprehend everything, okay? So how will you find the direction of the market? How will you take the entry? So which are the conditions for entry? Where is the stop loss? Where is the take profit? How you're going to manage the trade? So what is the risk management strategy? How much you're going to risk on the position? Which is the minimum risk to reward that you are willing to accept on the position? So literally everything when it comes to the strategy. Then what you have to do is backtest those rules for at least 5 years in the past. So you have to see if that set of rules that you have lined up, it actually works, okay? And the best way to do it is to take old data and apply those rules on the old charts. For example, you can use the reply tool on TradingView to basically, with the reply tool, you can literally simulate the behavior of the market. Okay, so for example, you can just click on forward and you can in the market, the candles will just continue to print. And by using this tool, you can use it on multiple time frames, it automatically switches, and you're able to actually backtest, okay, your rules. And by doing that, you will be able to understand if the set of rules that you have developed actually works or doesn't work. And if it does work, so it provides a positive return on at least 5 years of data, you can be sure that the strategy actually is profitable, okay? Then the third step after that, what is it? It is to demo trade at least for 6 months those rules profitably. Because now that you have the set of rules, it doesn't mean that you're able to actually trade them in the market. Now, obviously there are a lot of variables that can actually come into place, and you might actually make mistakes in applying the rules. So that is why it is very important that you take, after you have a profitable strategy, a profitable rule-based strategy, that you take at least 6 months to be sure that you're actually demo trading the strategy consistently. And only then, after you have followed all these 3 steps, only then you can actually go live and you can kill the market consistently in the long term because you have a profitable rule-based strategy and you also know how to trade it. Okay, so how to apply the rules in actual live market conditions. Now that you know which are the steps to actually developing a trading strategy, let's go and make a full analysis on a USD JPY and see what is the situation at the moment and where is the opportunity that we can be looking for on this pair. So let's start our analysis as usual from the monthly time frame. Now, if you're asking yourself why the monthly, because the monthly, weekly, and daily time frames are the best time frames when it comes to the direction of the market, and the 4-hour time frame is the best time frame for entry. So let's start from the monthly. Now, on the monthly time frame, what we can see. On the monthly, we can see that the market is currently at an extremely strong demand area for this market. In fact, exactly from this level here, the market started multiple rejections to the upside. From here, the market started all this huge move to the upside. Again, the market tested this zone here and it got rejected to the upside. Again, it tested the zone here and it got rejected to the upside. Again, the market tested the zone here and it got rejected to the upside. And currently, the market is testing this extremely strong monthly demand zone at this level. So definitely something that you need to know from the monthly time frame. And what I suggest for your trading strategy is to always take the direction from the monthly, weekly, daily time frame, and always checking the COT data, so the commitment of traders, what the biggest banks and institutions are currently doing in the market. And I will now show you also on this pair so that you understand. So on the monthly, we have strong demand. Let's go down on the weekly. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. On the weekly time frame, what we can see. On the weekly, we can clearly see that this is indeed a very strong support area, acting as extremely strong support here. Again, support here, again supported this area, and again here the market rejected the zone to the upside, and currently the market is testing the zone at this level, and we want to see from here the market make a move to the upside. Going down on the daily time frame, actually before going down on the daily, there is one quite important thing that I want to show you. Now, how is the market actually approaching and how it has approached this strong monthly and weekly demand? It has approached it creating this formation here, which is an overextended M formation to the downside. So basically a market that creates this formation is an overextended M formation, and after a move like this, the pattern most of the times completes with a move to the upside to go and test this structure. So basically from the weekly, what we can see is that the market has approached the monthly and weekly support with a bullish pattern, which is definitely more confluence for a shift away from this area, which gives us a quite nice upside target at this zone here. Okay, so on the weekly, this is what we have. And the last thing that I want to show you on the weekly, if you have this move to the downside, okay, if you want informations on this move, where are you supposed to be taking your Fibonacci? Now, as usual, if you have an impulse, if you want information on the retracement, you take your Fibonacci on the impulse, right? But if you want information on the next impulse, like in this case, because you have the impulse, correction, and the next impulse, if you want information on the next impulse, where are you supposed to be taking your Fibonacci? From the high to the low of the impulse, which shows you that the -27 and the -0.618 are lining up perfectly with the weekly and monthly demand, which is exactly what you want to see. Going down on the daily, what do we have? Now on the daily time frame, we can clearly see that the market is currently overextended to the downside, so it created this nice impulse. After an impulse, what do you want to see? You want to see a retracement, possibly, to complete the weekly pattern at the structure that we have just identified. So to complete the weekly overextended M formation to the downside with a nice move to the upside to test the neckline, aka the previous support to resistance, which is the structure of the market. Now, before I go down on the 4-hour time frame and I see you what we have on the entry time frame, let's first give a quick check at what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing on the USD and on the JPY. Now, starting from the USD, what we can see that we went from having 25k net positions with way more longs than shorts from an institutional perspective on the USD, with 39k longs and 14k shorts, all the way down to having way more shorts than longs, with 24k shorts and 18k longs, and a negative net positioning of minus a 5.7k with a 78% short exposure, which is very, very high. Okay, it's massive. And in fact, all USD pairs have been moving in the direction of a weak USD. So in the case of USD JPY, to the downside, because clearly institutions have been selling the USD and it has been moving to the downside quite aggressively. And if we go and see what we have from a JPY perspective, what we can see that the JPY in the short term has been sold from 35k net positions all the way down to 19. So clearly a decrease in the short term of the net positions, which is good for our overall bullish view of USD JPY, obviously for the short term. Now, going back to the USD, there is one thing that I want to show you. As you can see, there is a record amount of shorts that we currently have on the USD, 24k. Very, very long time since we had such an amount of shorts. And can we expect some profit taking on these shorts? Obviously, yes, which is exactly the thing that would trigger this retracement. However, as usual, trading is reactive. It is not predictive. So going down on the 4-hour time frame, what do we have? On the 4-hour time frame, clearly, we have a situation where the market has been creating lower lows and lower highs, okay? And if a market is creating lower lows and lower highs, can you be looking for a long? Obviously not, because it would be too risky. That is why trading is reactive and not predictive. On the monthly, weekly, and daily, we have seen that we expect a retracement. However, we have to wait for the proper confirmations on the 4-hour before we can even add USD JPY on watch list. So what we will be doing with students. Now, inside of this very strong area that we have identified on the weekly, which is all this, and also the monthly, which is all this zone here, okay, we will be monitoring price action on the 4-hour time frame from a reactive and not predictive perspective. So we will be waiting on the 4-hour time frame inside of this area for the market to shift from a bearish market as it is right now to a bullish market, and only at that point we will add USD JPY on watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with students with a very good risk to reward. And at that point, since the market has shifted to a bullish market, a good probability for the move to the upside for a minimum 1 to 3 risk to reward and the completion of the weekly overextended formation and a rejection of the monthly and weekly demand and the completion of the pattern at this level. But first, we need to see a clear shift from a bearish to a bullish market on the 4-hour time frame. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, you find linked in the description the complete mentorship program that I have. So the way in which the program is structured is that first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, and I will see you in the next video.